Frank, hold it steady. I'm gonna put the star on the top of the tree.
Hold on, let me plug it in first.
Whoa! Watch the food, will you, Frank? I got an EDGEFINDER alert I want to look at.
I got you.
The food, Frank, not the charts.
Huh? Oh, yeah, sure thing. You didn't leave the keys in the spaceship, did you?
Yeah, I did. Why?
I think someone just stole it.
Oh, gosh. You know what? Whatever. That was kind of a last month thing anyways.
I think I just saw Santa walk past the window.
Frank, the food! You left the oven on!
I'll get it.
You're both here? I could have sworn I saw your ship fly by.
I don't want to talk about it.
That was Santa's sleigh. Jerome, so happy you could make it. How's your day been?
Just close the door.
This holiday season, give yourself the gift you know that you've been wanting. A funded trading account with FX2. FX2 allows you to earn real profits on a simulated account up to $200,000. To start, select any of their one-step evaluations. We know things can get pretty hectic during the holidays, but you can take your time with the evaluations because there's no time limit to complete them. And with FX2, once you pass, they'll even refund your evaluation fee during your first withdrawal. You can collect up to 85% of the profits that you gain on your account. You can buy a whole lot of presents with that kind of money. Get funded with FX2 today and find the most wonderful trades of the year.
Wow, how about that new theme, huh? It's almost as exciting. Well, actually, it is as exciting for myself and Frank, and I'm sure some of our guests to come to these new month streams because Chandler and James, the guys behind the scenes, the wizards, I like to refer them as. They do a wonderful job putting together these streams, and we are now fully into December. And as you can see, we rethemed the stream, and a lot of people knew this one was coming. The regular viewers, you guys know, we like to have a little bit of fun with the streams. We do this every single day. You got to keep it fresh somehow, and to do that, we have fun with the theming. So shout out to James and Chandler for putting together what a wonderful Christmas theme we've got here today, kicking off December. With that said, welcome back everybody to a new month. Yet a lot of changes on the stream theme, but not a lot of changes in terms of what we do on these shows. Of course, we talk setups, we look at markets, we discuss major events like today's event, which is PMI numbers. We've got a little bit of a runway here before Jerome Powell comes on, by the way, at 11 Eastern. But until then, we've got PMIs to keep us interested. And then we've got plenty of time with guests to go through setups and so on and so forth. You guys know where I like to start. We'll take a look at the DXY. This is the currency index for the dollar. And to my surprise, it squeezed a little bit hotter than I thought it would. Take a look at the dollar, guys, making a push. Perhaps on its way up to that 104 level that we have discussed for a while now. Now, I'm not saying that I called for the price to get back there because I've been very, very vocal about being dollar bearish. But here we are on the 4-hour chart, making a push higher. And, you know, I'll stay consistent with my thought process on the dollar. I do think that at this point, momentum short term is favoring the bulls. However, as you get up into this zone, I would expect most likely to see the dollar get weak from there and continue lower. Now, you may be asking, what for? Why? Why dollar weakness? Well, you know, when we talk on these streams, we do a mix of technical and fundamental. And if you're a regular, you know this already. But the reason we do that is because fundamentals, they drive the bigger trends that occur in the markets, right? I can tell you for the last several years, for the most part, what was kind of occurring in the markets based on the dollar index and based on, kind of like what the Fed was up to. So recently, what has caused this? Well, basically the softer tone from the Federal Reserve is what could wrap it up. And again, the idea there being that the Fed, they control monetary policy. If they're hawkish, if they're raising rates, the markets are going to get a little scared, and hence they're going to go into the dollar as that safe haven currency. But they're also going to do so because, again, if interest rates are expected to go up in the US, the dollar is going to be looking stronger than some of the other currencies around the world. Okay. Now, the opposite is true as well. If the Fed is expected to cut rates, or at the very least hold rates steady without raising them, I think that there's this continued downtrend that we do see into the new year. So as we rally, again, you can feel free to tell me if I'm wrong, because if price does break out, then I will be the first one to say, whoops, I was wrong there. But my personal opinion is I think we see price roll over if the dollar index continues to push up into this 104 area. So how am I trading that? What am I looking for in setups? Well, I'll tell you one setup that has been mixed for me so far. I am currently already long pound USD around current prices. My stop loss here is below the structure lows here. So I do have a long position open on pound USD. I'll show you what that looks like here in the VIP group. So if we go over to my currency trades, I've been trading a lot of pound pairs. So I'm risking 50 pips. So let me actually set this up on our chart so we can see it. Okay, let's see. 1.2619, 2619. So my entry is around current levels really, but I entered it over here. So in terms of 2619, did I say that right? 2619. Yep. So 2619 is around here. So I entered over here, and my stop loss, like I said, risking about 50 pips, puts me around just below the 50% retracement. So I do already have this trade on. This is one that I'm in, and you can see it's come back to just about where I'm entered. I think that the pound has upside, and again, I might be a little early to this position. If that dollar index continues to squeeze higher, it is likely to put some pressure on my trade. So we could see this thing go a little bit further into drawdown, but as long as we hold the 50%, I'm still happy with this position. So I do have pound USD long. We'll see how this one goes from here. And again, with that dollar index squeezing higher today, it does seem like it's possible that this could take on a little bit of water here. So we'll keep watching the pound, but I like it long. And I'll go over why I like it long here in just a second. Let's go pull up the top setups algorithm page. And what we can see here is we got a fresh list of assets. You got pound USD coming in at +4. Now, This one popped up as a +6, the euro and the gold market. Actually, very interestingly, coming into play here, gold and euro, bullish setups for December, possibly. So I'll be watching those. So again, in terms of the pound US dollar, I am long, seeing if we can catch a push higher. We got this nice upward trend overall. And again, when we take a look at the Edge Finders readings, it's a lot of economic data that again, the simplistic point of fundamentals that I made earlier about the dollar index and why I think it could continue lower is because inflation is still cooling, and that trend alone keeps me bearish on the dollar for now. Okay. So again, my thought process with today, we do have, it's December 1st, new month, PMI numbers coming out at 47 point, I'm sorry, forecasts are for 47.9. That comes out in just a few minutes. We've got about 9 minutes to go to PMI numbers, which should be interesting in regards to the dollar currency crosses. But I want to pull up while we're discussing it. We'll take a look at Euro USD, which is getting beat up here this morning. And so I want to point out something. The Edge Finder has a bullish reading, but just because the Edge Finder has a bullish reading does not mean I go outright and just buy these things immediately. The Edge Finder is mostly a fundamental and sentiment indicator. With that said, it is used in confluence with your own trading strategies, etc. So for me, I still need to see a technical setup. And right now, what I don't like about the euro is, you're getting this momentum that was had is seemingly falling apart, right? So I don't like how big these red candles are. And I know that sounds like a really simple, I don't like how red it is, but sometimes it is as simple as that. So for me, what I'm looking for is I'd like to see, again, we'll start fresh here on the euro. I'd like to see levels start to hold for the bulls, right? So for example, we're coming into a level of potential support here, but I'd like to see this hold. So, again, I'm not fully convinced considering we had this big push up, right? These are the kind of markets where I like to be long, obviously, right? In hindsight, but I would like to try and find trades where it's pulling back and I'm able to capture some of the momentum while it's still in play. But I have a harder time trying to enter trades like this, where the market is just tanking and it's fallen out of favor. So for me, what I'd like to see before getting bullish Euro USD would be price action to hold up, right? Meaning higher lows, higher highs. So I do like the euro long, but not from a technical analysis standpoint, just at this point. Now, if you're more of a swing trader, like higher time frame, perhaps you're looking at the euro and saying, well, maybe a pullback into this region. This is a longer term key area of support that could be interesting. But for the most part, going to have to be patient on this one. Yeah. So, yeah. In terms of the euro, we'll continue to watch that. I think I just want to clarify in terms of our schedule here today. I think we have Ivan in the back room. Ivan, I don't want to keep you waiting. I think we have Kenzo coming on in like 10 minutes, and I think our times confusion might be going on. I think we have 10:45 Ivan, so that's in 1 hour. I apologize for the confusion, but I don't want to promise two people the same spot. Anyways, in terms of other setups that we're watching for, let's look at the bearish side, dollar yen. And speaking of dollar yen, when we do get back to Ivan, when he comes back later, absolutely a question of what he thinks on dollar yen will come into play. Dollar yen still bearish in terms of price action. Take a look at the 4-hour chart. We're basically still hugging this trend line to the downside. Prices come back up to this area a few times, but each time has found some sellers in that area. So we'll continue to watch dollar yen, but actually getting a bearish reading on the Edge Finder has me actually intrigued. Dollar yen, dollar CAD. This is interesting. We're getting some dollar setups today. Dollar Swiss, dollar yen, dollar CAD, dollar ZAR. Ivan will be back soon. Okay, cool. Yeah, thank you, Ivan. Sorry for the confusion there. Anyways, PMI numbers come out, guys, in 4.5 minutes. So this could be market moving for sure. PMI numbers, of course, a reading of the economy here in the US, and whether that number be hot or cold or as expected, all three could potentially move the markets. Now, yesterday we had core PCE numbers that came out pretty much exactly as expected, and the markets didn't spike that much. Just remember what we're looking for in terms of a spike would be a surprise in this number, right? So we're expecting 47.9. that is expecting a contraction in the PMI number. From 50 or above is a expansion, 50 and below or below 50 is a contraction. So we are watching to see that contraction come into play here today. If that does come into play, it is likely, if we see the contraction being lesser than expected, that's likely to be a deterrent to the dollar. And if it is better than expected, a beneficiary of the dollar, right? A stronger for the dollar kind of number. But we will come back to that as we've got a few minutes to go here. I want to take a look at gold with you guys, and gold does not want to seem to quit. And these are the markets that I do like trading. So I mentioned earlier, euro dollar kind of fell out of that momentum. Gold, I would say, is still very much in that momentum. In fact, we can take a look at a little sneak peek. Here's our momentum indicator. I don't know if you guys know about our momentum indicator, but little top secret action going on. We have some early access. Well, we don't have early access just yet, but we have some tools that we're working on behind the scenes. You guys know us. We're if you watch the streams regularly, you know we're a software company. We build tools for traders. And here's a little sneak peek. We're coming for TradingView, guys. We are coming for TradingView indicators and tools. We've got some really cool ideas that are coming. Frank is kind of spearheading that, and I'm helping him out on that side as well with TradingView indicators. Some of you guys have seen some of the things he's built. Please note we will have more information about those tools soon. I find them incredibly useful already for spotting momentum, spotting potential reversals, overbought, oversold. But here's what you can do. If you do want some early access information, any updates to this new tool feature stuff, here's how you can get access early on. Telegram, join our Telegram. The link is in the chat real quick. And James, if you don't mind, while I'm on the topic of Telegram, can we get some spicy Friday polls going in the Telegram? James is our poll master, and he does a great job at really making a lot of people mad in the polls. I'm just kidding. No, actually, we've had just really good polls from James. He does a great job. He is the poll master. So join our Telegram. But again, these indicators and things that we're working on will be totally available in the coming weeks, and early information will come to Telegram first. So make sure to join our Telegram. It's totally free to join. And James is putting together a spicy poll. So if you guys want to vote on some trader polls coming in hot on our Telegram channel, again, free to join. Link is in the chat there right now. Okay, guys, we are about 1 minute out, so let me not miss. I don't want to miss news today, so let me go ahead and get the chart ready here. We got 15-minute charts coming up, and I'm just going to take off the momentum indicator for a second. We'll go just pure price action for a moment, and let's go DXY top right. So we got dollar index top right, gold. By the way, interesting, gold up, dollar up. That's a little spicy. S&P we'll put on the bottom left, still long, by the way. Would like to see that continue. And we'll put euro dollar on the bottom right. Okay, so we got euro, dollar, gold, S&P 500. 30 seconds to go before PMI numbers do come out. If you're enjoying the show, by the way, and you like the Christmas theme, hit that thumbs up button on the show real quick. Do us a favor here, and we will very much appreciate your support as always. You guys are awesome. So with that said, we've got 20 seconds here to go, 15 seconds. Let's go ahead and roll our breaking news for PMI here today. And there you go, down to the fine details with our Christmas themed breaking news. Again, shout out to the producers. Here we go. PMI numbers. Let's see what we got here. Dollar index coming down here a little bit. But not a substantial move just yet. Let's go see if we can check the numbers and see if we did in fact get something of interest. There it is, 49.9 on the manufacturing prices, and PMI did in fact come down, 46.7. Probably favorable to S&P, gold, etc. Euro as well. Euro, by the way, tagging a support zone and finding potential support. We'll watch this candle. Dollar index coming down pretty hard here. Not a substantial move by any means, but a move nonetheless. Gold ticking slightly higher. And again, we're watching for the follow through here, because sometimes you get these news events and they have a delayed reaction. They have no reaction. It just depends how surprising the number is. And I would say that you kind of had some mixed. We have one green, one red. That should tell you something right off the bat. But you do have 46.7 on the manufacturing PMI, which was what the market was kind of looking for. Contraction in the economy right now is still kind of favorable for like equities, like indices, right? Because the idea being that is going to push the Fed off of the idea of rate hikes, but also maybe more importantly, even start to get closer to the discussion of rate cuts. So if inflation continues to come down and the economy is steady, but kind of cooling as well, that has the potential to be bullish for gold, bullish for S&P. And that's sort of what we're seeing so far. We're seeing gold push 2046. By the way, I mean, gold, we hadn't really even covered it too much on the channel, but gold securing a place in the 2000s here. And, let's go full screen on gold while we're talking about it. We'll take a look at gold and look at this. Gold making a push here, guys. Here's your 15-minute chart. For the day traders in the room, keep an eye on this 2048 zone. This level of past resistance could come into play here in just a moment. I mean, it looks like price wants to squeeze on up to that 2048 price point. And, in terms of support and resistance, if you're a day trader here watching gold, or even just a swing trader, honestly, it's still valid information here. You got your 30-minute view as well, looking interesting, and even your 1-hour chart. If price can get above this area, there may actually be, and look at that, 2048, look at that. We're popping right up into that zone. Gold is moving here this morning. Let's see if we can, again, now the question is, Nick, what do we do? Well, here's what I think about gold. If you break and close outside of where we previously failed, that tells us a shift in the market in terms of price action. So I'd be interested to see, can we actually close above 2048 with meaningful, momentum? Again, if you're calling for gold to push up, we need to see something decisive. We need to see something strong because, guys, we are talking about an all-time high for gold is $25 away, right? $25 away. To get gold up into the all-time highs, it's got to have some serious momentum. And then you start talking about swing traders wanting to break out of that level. It gets me excited just talking about it, because in terms of longer term, gold, in my opinion, is long overdue for an all-time high breakout. And so that's why I've been kind of looking for these setups. I think if you're a swing trader or a day trader watching gold, this is just my opinion, as everything always is on these shows, or our guests' opinion. But these are opinions being shared. I'm not telling you what you should go do with your money by any means. But in my opinion, I think gold heads back to retest the all-time highs. And I think on this fourth attempt, longer term, you look at a weekly chart, this is going to be like the fourth time. If we do get back up to those all-time highs, likely we break them. Okay, so I'll see. We'll of course, we're here every day covering this content, but I'll be watching gold, and I think that the path of least resistance is price wants to go test. Now, what gets us above the all-time highs, that's up for debate. And I would say U.S. debt looking kind of creepy, potential recession fears kind of still in the cards somewhere. The US dollar looking very weak. There's some catalysts that could get us back up to and perhaps beyond the all-time highs, but we'll watch that as we get closer. But anyways, again, PMI numbers here coming in cooler than expected, and that cooling is in fact having an impact on, you take a look at the DXY here this morning. I mean, we've been covering gold, but it's really, the dollar index is pulling back, right? It had this big push. It's now pulling back here on the hourly. You take a look at, for example, the euro. And by the way, the dollar index is not suffering more because the euro has been having a terrible day. And of course, if you look at DXY, the dollar index is heavily weighted against the euro. And so if the euro is weak, it's going to strengthen the dollar index a little bit, right? We could also take a look at some other pairs. I see people mentioning dollar yen. Let's take a quick look at USD JPY. Dollar yen dropping pretty hard here, by the way. And again, to me, the dollar and dollar yen actually gets a bearish reading on the edge finder. So I think this is actually set to continue lower. Again, amidst the cooling inflation story, I think dollar yen is a loser in that story, right? You know, in every story, fundamentally, there's winners and there's losers. I think, you know, the disinflation trend, which, by the way, we did confirm was a real word. Somebody commented on my video and said, you know, disinflation, Nick, that's not a real word. To which I felt stupid for a second because I was like, wait a second, is that not a real word? I did confirm it is actually a real word. Disinflation is, in fact, a real word. It does sound a little made up, but you know, so anyways, it is a word. The disinflation story, I think, has a lot of potential bearishness for dollar yen. I'm not necessarily, though, like dollar yen is not absolutely my favorite pair to trade because I don't necessarily like the yen is kind of a risk off currency. And I'm very much not on the risk off camp. I mean, you guys have seen me. I've been long the S&P 500 for a month straight as a short-term trade, but just has kept trailing and trailing. So I am more on the risk on sentiment side, which is why I picked pound dollar over shorting dollar yen. Does that make sense? I want to ask in the audience here, does it make sense why, if I am risk on oriented in my analysis, if I think markets have potential to expand risk appetite, like if I think risk appetite is going to be bigger in the coming months, does it make sense, yes or no, why I would pick pound USD longs, again, bearish USD, as opposed to short USD JPY, still bearish USD, but my selection of the pound over the yen? Does that make sense to you guys? Let me know in the comment section real quick or in the chat. Does that make sense? I mean, I could be wrong in thinking that I think markets are more risk on. I'm not saying that I'm absolutely right about that. I'm saying I could be totally off on that. But my opinion, my bias is risk on oriented currencies. And of course, the old faithful S&P 500 trade that I am running 31 days in on, right? And by the way, holding up today, liking those PMI numbers, we're still in this trade. And this trade has been going on. What happened to all my chart analysis? I'm gonna have to redo that here with you guys because I don't know what happened to my my drawings. I had a fancy picture all drawn up here. I did, in fact, pick up the S&P 500. I bought it over here. Also, wait a second. Hold on. Template, buy entry. Did I change my template for this? Let me change that to at least blue. Sorry, guys. I'm gonna have to redraw my analysis here because this is gonna bother me if I don't. So S&P 500, I went long November 1st, and I've been in this trade for 30 plus days. What pair is more risk on, GBP or EUR? Joseph, I would say it is somewhat dependent. That's a good question. It varies. And that's, I know, not a very easy answer, but markets are not that easy in general. I would say that the euro can actually be more risk on sometimes, but lately, especially following like post-Brexit era, the pound, I would say, definitely swung more into a risk on-esque currency pair. But it also kind of depends. If you're comparing the pound against the Australian dollar, suddenly the pound looks more risk off. So it very much depends what it's crossed against, and if you're talking USD. Also, can I get a quick opinion from you guys? Dotted lines or solid lines for my orders? I'd like to clarify like where I got in. Dotted lines or solid lines? Could we get a Chandler or James? Would one of you guys create a YouTube poll for that? Because now I'm like really unsure about which one I like. So let me show you real quick, guys. In terms of trades, illustrating where a trade was entered, should I do a solid line like this, like stop losses at this level, or do you like the dashed lines or dotted lines? like a dashed or dotted. Solid lines is the way. So, well, for support and resistance, what I do is I like to use zones. So zones, right? And I actually picked this up on a lower time frame, but the analysis was basically this area. Support has held along the way. Dotted lines. Oh, we are conflicted in the audience, guys. Let me know dotted lines or dashed lines for order execute or like order entry levels, etc. By the way, my stop loss is below this level. I think I need to actually, you know, I've been in this trade for so long now. I think it is time to actually trail stops while we're on the stream. By the way, we're 49 minutes away from Jerome Powell speaking, guys. The stream is not over. I know a lot of people are, you know, PMI numbers are done, but the stream continues with FOMC. And by the way, Chandler James, I know I'm putting you guys to work here with the stream today, but can we switch the thumbnail and title? I don't know if we already have. You might have already done that. But with Jerome Powell speaking, I feel like that might be kind of exciting for people who are wanting to hear him speak. I am trailing stops, by the way, guys. I'm going to move my stop here on S&P 500. Members in our signals group, I am updating my S&P trade further into profit here. So give me a moment to do that. So I'm going to go, let me see. So this is 1.10% down. $1.10% down. Gonna move stops to this point. I don't know what happened to my chart analysis. It disappeared. So 45.20 is where I'm trailing a stop to. Okay, 1 second, guys. 45.20 is where I am trailing a stop. Okay, so okay, for those of you in the VIP group, I'm sharing it to the indices trade section in just a moment. Please bear with what did I just do? Oh, okay, there we go. Okay, on SPY, I'm going to take a picture of my analysis here. Also, I want to see you guys' responses in a second. I'm going to take a look. Okay. I think, I don't know. I think I feel like solid lines might look a little bit better, especially with my dark theme. But I'm conflicted because some people said dashed. I don't know. Anyways, let me screenshot this and get this out to members as well. I mean, the S&P 500 trade has been just going for a long time now. But I'm just trying to stay patient and trying to trail as long as possible. I'm just sharing a screenshot now. Okay. 451.72, 451.72. There we go. Everything looks good. Trailing stops higher, though I do think seasonally we have more upside. Potential Santa Claus rally. I don't know how to spell Santa Claus. Hold on. Santa Claus? No. Is there an E? Oh, there's two ways of spelling it. Some people put E on the end. I don't think there's an E though, right? Potential Santa Claus rally. Trailing stops higher. Will stop out if price breaks support. Okay. There we go. Stop is updated. Has no E at the end. Okay, fair enough. All right. So let's see. In terms of this trade, like I said, if stops get hit underneath this structure, also I'm going to pull up the YouTube channel because, hold on, I'm pulling up YouTube so I can see you guys' votes. Okay. All right. 65. Okay, so I asked you guys, it's poll time here before we bring in Kenzo on the stream. We got to look at some polls here for a second. Okay, I asked you guys dotted lines or solid lines on TradingView for my order executions. 66% of you guys voted solid lines, so thank you for that feedback. I agree. Oh, also, we just got a donation. Thank you very much, the info dude. I very much appreciate that. You don't have to donate to the streams, but it does mean a lot to us here at A1 whenever somebody does donate. Again, you absolutely do not have to. It is very much appreciated, but obviously no requirement. We get the money tree raining. You made the money tree rain, and that's awesome. Okay, so the other poll, James did a poll for us. Let me pull that up. Let me pull up the poll. All right, let's see. Okay, here's the question. The question of the day from James. Which trading tool do you want Santa to bring you? An Edge Finder, a VIP Discord, Nick's complete trading strategy, which is included in the Discord, TradingView Pro access, or a funded account? That is a spicy one, James. And if it's not the Edge Finder, I might be a little sad. Okay, it is the Edge Finder. Whew, it's close. That's really close. A funded account, 29%. I mean, everybody wants to get funded these days, but thank you to our Edge Finder fans. You guys are awesome. Actually, I might have swung that. There's not that many votes, so my one vote might have swung it. I already have the Edge Finder, though, so maybe my vote doesn't count. Anyways, yeah. Seasonality seems to be off right now. Not sure if it's just my copy, but EuroCAD is reading -1 for seasonality, even though it's the best month now. Am I reading it wrong? EuroCAD? We'll look into that. We'll take a look at seasonality data, make sure it's up and running. But yes, real quick, guys, I do want to go ahead and transition the show. We've got Kenzo coming on again, as we did yesterday. For those of you guys who stuck around with Kenzo, you know he's one of our regulars, comes on the show, takes a look at both fundamentals and technicals. And in just a second, he's going to be joining me on the show. But before we do that, we're going to take a quick break to thank our sponsors. And guys, watch this. This is really, really cool. Again, the producers did a wonderful job retheming the stream for Christmas. And so here comes another Christmas-themed promotion that offers you some really cool perks when you sign up with 8cap. So check it out. Coming at you right now.
The holiday season. Many people think it's the most wonderful time of the year. While everyone's out and about, grabbing gifts for loved ones, don't forget to get something for the most important person on your list. You. Yes, get something nice for yourself. Get yourself the gift of a premier trading software and community by signing up with 8cap. 8cap is in the giving spirit because they're handing out the A1 Edge Finder 100% for free. In order to join in on the holiday fun, just create a trading account with 8cap. And if you stuff your account full of funds like a stocking over the fireplace, you'll get access to the Edge Finder and our trading Discord. So don't forget to give yourself a gift this holiday season and sign up with 8cap using the link being dropped in the chat now or in the description down below. Don't get put on the naughty list. Trade with 8cap.
Not so bad, huh? There you go. We got our 8cap promotion there. That was pretty cool. Well done to James to put that together. And Kenzo, welcome back to the show. Thank you for being. It's almost like I saw you yesterday, and now you're back on the show. Good to see you.
Yes, also on the same side, we actually have to work. There is nothing that we can do. So yeah, great to see you too, man.
Yeah, it's good to have you back. And Kenzo, we have, of course, kind of a busy day. We had PMI numbers that came out just shortly ago, about 20 minutes ago. We had the latest PMI numbers, which did show some more contraction in the U.S. economy. And Frank, my trading colleague, which you probably know from some of the interactions we've had here on the show, he asked me a question.
Yes.
I want to ask that same question to you. Frank asked me, in terms of indices and risk on sentiment, do we want to see still cooling economic data? At what point do we not want to see cooling economic data, right? Because let's say that you are bullish on the S&P 500 or the Dow or the NASDAQ. If you want those things to go up, at what point do you want, because it seems a little confusing at first, why would you want slowing economic data if you're trying to see the stock market go up? But it's because, of course, the Fed. But at what point do you think, Kenzo, that bad news is truly bad news, and that changes, right? Because this cooling PMI number is actually in some ways still good for stocks, but at what point does slowing economic data become bad? I hope that question makes sense. I know it was a lot.
Yes, yes, yes. Yeah, you're right. Sometimes it can be confusing because we do want to see the economy slow down, but not too much. Because if it goes too much, it means even the stock market won't perform very well. If the economy slows down, it means there is no people who are waking because now they're laying off jobs. So that is also very bad and might lead to recession where there is enough people who are not working, companies are so struggling. But we actually want medium rates, not really, really. If maybe we want the economy to go down, not really on the negative side, but on the middle side. Uh, it might confuse sometimes, but yeah, we don't really want it to be on the highest side. Like when it goes down, it's where maybe everyone is going to suffer. That way, even the stock market is going to suffer. We just want it to be on the medium side, you see.
Right,
So yeah,
exactly.
it might be confusing. It might be confusing sometimes, but we don't really want it to drop like too much.
Yeah, no, that's a really good point, and I have another follow-up question in regards to a very specific asset that, of course, everybody's interested in, which is gold. In terms of the PMI numbers here today, some people are pointing to the fact in the chat right now that gold is breaking out or seemingly trying to do so, and it does kind of make sense if you think about it. PMI, a measurement of the economy, slowing economic
Mm,
figures, that environment, generally speaking, very good for gold. And it's why I think, Kenzo, that gold is headed to go retest the all-time highs. But what do you think? I mean, clearly, again, PMI numbers having a positive impact on gold, slowing economic data, bullish gold. What do you think about gold right now? Are you in a trade? Are you looking to trade it? Do you think it's overdone? What do you think?
yeah, I think gold can still push higher. Actually, I was still waiting for it to retest. Unfortunately, I was busy with other things and it retested here and now it's far. So maybe I will get it above there or maybe I can wait for another retest. But I think the more the economy is slowing down, now it's a good time for to buy gold as a safe haven because we don't really like very weak economy. So we might see it push to the upside. Like as if I actually heard on the news, I was listening to the news, there is a chance that next year they might cut the rates and that is also not really good, especially when the economy is not performing very well. So at the end of the day, it means things like gold they can actually push higher.
Yeah, no, and I think, Kenzo, I've made this point on the show a few times, and in the podcast series that I joined for Market Pulse, we've talked about this topic many times, and I want to get your thoughts as well. I think next year,
Yes.
as we go into 2024, the bullish and bearish argument of this year has been very much focused on, they need to keep rate hikes going, and inflation's not going to go anywhere. And that was the battleground for the bulls and the bears. But now what I think is going to become the new battleground as we go into 2024 is the economy, are they going to rate cut? At some point, they are very likely to rate cut. That is the consensus. But the question is, are they going to rate cut because, to your point, the economy slows, and perhaps they rate cut because the economy is slowing too fast? Or are they going to rate cut because they can, right? Like there's a difference in there. If the economy holds out and stays steady and they rate cut just because they can do so, that's incredibly Goldilocks, perfect, or a soft landing. Whereas if they cut because they need to, because they cut because the economy is starting to really slow down and unemployment spikes, those are two different rate cuts. Would you agree? I mean, those are two different scenarios entirely.
Yes, I think for now I can say they don't actually have a choice because they're trying to slow the inflation. At the same time, that hurts other economic activities. So
Mm.
they are forced to try to regenerate that movement in the market because if they cut, it means now other smaller businesses they can actually take loans. So circulation of money is gonna go back to little bit normal, but if they just pause like that, it's also difficult for them because it's like they don't really support the economy. So
Sure.
now interest rates are very higher. So it's not easier for anyone just to take loans, to buy cars. So all those activities are a bit expensive now. So they have to. They are forced to. It's not like maybe they have any choice. If they have any choice, I think, yeah, I don't think currently they don't really have any choice. They just have to. If economy keeps going down like this, they have to do something.
Yeah, and what I think is interesting, Kenzo, is to both of those scenarios, cutting because they have to or cutting because they can, both of those scenarios,
Mm.
they in some ways offer kind of a bullish environment for gold. Now, if you think about it, if they cut because they can, it means that inflation is cooling, the economy is okay, but that's going to lead to a weaker dollar in terms of economy cooling some way, and so that's good for gold. But if they cut because they have to,
Yes.
and fear is very high, and recession possibilities, and inflation keeps going lower, at beyond where they even wanted to, if that were to happen, that is incredibly bullish for gold. So it's almost like I see in both scenarios, as long as inflation doesn't start to tick higher again, gold looks really good. And so for me, I agree with your technical breakout there, or technical analysis there that you did. On my end,
Oh
if
yeah,
we do,
on gold.
yeah, I was going to say, like, this idea of a breakout, if you get the pullback, I think, to be completely honest, that anything underneath the all-time high right now is uh, a decent possibility of being a nice, you look back in a couple months and it might be a
Bye.
really
Yeah.
nice entry. So, of course, we'll see if that does in fact play out. Markets can change, but would you agree? I mean, is it really just, would gold be on your radar for the next few weeks, next few months? What do you think?
Yeah, from now, actually, the way I see it, from now on, I'm just waiting for a smaller break out there because I missed it
Mhm.
on the lowest side. So unfortunately, I'm not a swing trader, but if I was just going to hold it and forget. Maybe I was going to check it maybe next year, January or February, because there is enough evidence that there is enough push in the market as the dollar is losing some momentum. So one way or another, even if it doesn't really break some new records, but I think we still have enough room to push the upside. Where we are now, if we check on a daily time frame, it's an area that we can call a previous resistance or previous high. So if we get out of that, then we're going to have a fresh start. So there is a room actually for a nice buy there or a nice new high.
Yeah. Yeah, I was going to ask you, in terms of, while we're on the topic of USD stuff, what about euro? I mean, euro has really fallen apart here. Um, Pound pairs, anything you're watching on the currency side?
Yes, I was also checking Euro USDs, GBP USDs because they were moving very nice since we're no longer on that downtrend. since last week as the dollar starting to lose momentum. We saw them starting to gain some momentum, and I think that will happen. And I I actually like this reversal because where the market was, it was difficult for us to continue buying. So this reversal, obviously, it will give us a proper structure to continue pushing to the upside. Plus, we never had a proper support area as this was a very new trend. So I think this reversal might end up creating a nice structure. So unfortunately now we don't know if maybe the market will respect this area or it will push lower. But even if it keeps pushing lower a little bit, I don't think that will be sort of a downtrend or something. I think it will be just adjusting. At the end of the day, we might still see the market continue pushing up. So yeah, I'm actually bullish on Euro USD. GBP USD also, it was pushing up very nice. So yeah, we're actually for the whole week we were just buying gold, GBP USD, Euro USD, even GBP JPY, and also selling USD CAD. So it's been very nice.
Cool. Yeah, no, and Kenzo, I appreciate you going through pound dollar there and euro dollar as well, just because, again, I think the dollar story is, as you know, we talk about the dollar constantly on the show. We talk about, where it's headed, what monetary policy is looking like, U.S. economy, and it really does set the basis for a lot of the other currency pairs, gold, etc. So, Kenzo, if you would like, I'm going to let you go take over the show for a few minutes here. I'll come back in maybe 10 minutes or so, and we'll chat again. But just give you the floor for a few minutes to go through some setups. And before I step back out, let me just remind everybody, if you have not already followed Kenzo on his YouTube channel, here it is. It's linked in the chat here. And Kenzo, please feel free to go through whatever you'd like to share with the audience. And again, guys, make sure to go subscribe to Kenzo for his content. I'll be back in just a few minutes.
Okay, great. Thanks. So the best thing that we can do, guys, I hope everyone is doing great. I will start by going straight to DXY or dollar index so that we understand what's really happening with the dollar. So on my side here, I can see that we are on a 4 hours time frame. So on this 4 hours time frame, or let me just go on a daily time frame just to see a bigger picture. We can see that the market was pushing to the upside. So what do we see now? We see that the market is trying to change that. Now the market is changing that trend. We see the market trying to do what? To push the upside. So we saw some aggressive selling for the past few days or a week. So now at least we can see a nice reversal. But it doesn't mean that the dollar is changing or maybe changing the trend to an uptrend. We are still on a downtrend. And from this area, I think the market might still continue pushing even lower. So this set a tone that the dollar is still on a downside momentum. So I'm expecting to see that happen, you see. So what are we going to do is we're just going to go and check other pairs that goes with the dollar. We're all going to see that they were actually pushing to the upside. And obviously the market won't just continue going straight down. The market has to breathe here and there. So that's what I'm expecting here to happen. So you can give me some few pairs that you want me to check. I will just go through them. Just give me some few pairs. I will also check them. So as we started with the DXY, let's go on other pairs. We'll start with GBP JPY. What's really happening on GBP JPY? I'll use 4 hours time frame. Someone say Euro USD, Euro AUD. Okay, we will also check that. So what's really happening here? We can easily see that GBP JPY, it is still pushing to the upside. And if you remember, we are coming from this downtrend. The market was downtrending. So now we have this fresh uptrend. But what I can say is we don't really have proper support area with this fresh or still it's still very fresh, actually, this trend. So what we want here is to see where will this trend, actually this structure respect this area or not. If it doesn't really respect that, it means we're going to adjust this support area. Then we're going to have a solid structure. So after that, we can say, yes, now we have something solid. Then the market might continue pushing like that, right? So you can see what I'm trying to explain here is we have very few touches. So, and this one is not really, this candlestick did not really close yet. So it means there is a chance that it can still push lower. But if it pushes up, it's also fine. It means this area it's now solid. Then we can look for a continuation of that buy as we are still on this bullish momentum. So Nasdaq, someone said check Nasdaq, AUDCHF. I will also check that. So let's go on something else, which is Euro USD. On Euro USD, what's really happening? We saw that the market was pushing to the upside. Obviously, the market it's coming from this downtrend. We were talking about it for quite some time. So now the market is pushing to the upside. We saw that DXY is gaining some momentum. That's why we see this reversal here. So the question is, will the market respect this sort of a support there? Then we will just wait for the market. If it respects that, it's also a good thing. Then we will wait for that and see if maybe the market is going to bounce back. So the best thing here is to wait and see what will happen. I think the market will be ending up respecting this area. Unfortunately, we have some economic news. I think Powell is going to speak in an hour or 2 hours, something like that. So that might also change the way we see the market now, because whatever that is going to say might be negative, it might be positive, but we will see some crazy moves. But what we see here is we are on a very nice uptrend. And if the market reverses here, that can be a very good thing. We can have a very nice buy going to the upside. So let me check other pairs. Check Nasdaq, EuroCAD, AUDCHF, Nasdaq, please. Okay, can you check DXY on a weekly chart? Okay, I will also check that. Or before we go on Nasdaq, let's check DXY on a weekly chart and see what's really happening. Weekly chart. Weekly chart, okay. So yeah, on a weekly chart here, you can see that the market, obviously, it was pushing to the upside. This was like a crazy bullish momentum. You can see that. So after that, we start to see a nice push to the lowest side. So we don't really see a change now. Maybe the market will reach this lowest area before maybe we see the dollar pushing to the upside again. But for now, it's a no-no. We can just wait for a proper breakout and something like that before we look for those maybe the change of a trend. But for now, I think we are still on that downtrend. So I hope maybe that helped. So let's push to Nasdaq. I see someone said check Nasdaq. So on Nasdaq, we can easily see that yes, the market is actually pushing to the upside aggressively. You can see previously we had a very nice structure going down. It was a very nice downtrend. You can see that. Now we had a breakout. So this breakout means that the dollar is losing some momentum, and other stocks, they are now gaining that momentum. So what we see here is we have the market starting to consolidate. I like the fact that we see the dollar getting stronger, but Nasdaq here is still holding up. I'm expecting to see a nice push to the upside. It might, maybe the market is waiting for Powell because already the market opened, but I don't really see any aggressive push here. But let's wait and see. But I'm expecting to see a very nice push to the upside as we just broke out of that resistance, which means it's time for the market to push the upside. It's time for the market to push the upside. If maybe the market breaks this support area, there is enough chance that maybe the market might even reach this level where it broke out before, maybe just to retest before we see another push to the upside. But for now, we will just use this support as our support, you see. So another pair, let me see another pair, check EuroCAD and AUDCHF. Okay, let's check that. Let's check EuroCAD. I don't think I have that here, so let's just add that. EuroCAD. It's EuroCAD, yes, yeah, it's EuroCAD. So on EuroCAD, I don't really trade much. Whoa, it's selling, huh? Okay, so let's see what's really happening. Firstly, I can just go on a daily time frame because I think I took some time doing. I take time checking these minor pairs. So what's really happening here? We are on a daily time frame, and we don't really have a proper trend. I think the market is just ranging because this daily time frame, we can see that the market have this area. We touched here 1, 2, 3, 4. Here it's twice. To me, this is a ranging structure. So it seems like the market is coming from this resistance. Obviously, the market is respecting that, and yeah, this is a stronger sell. And with the looks, you can see where the support is. It shows that the market can still reach this level. So I see an aggressive sell there. I see an aggressive sell. So another one is GJ pullback buy. Okay. Oh, you don't really want me to check that. Let me see. And now I can check AUDCHF. AUDCHF. Where is AUDCHF? AUDCHF. So again, it's not really. I don't really advise people to check the market, especially when we have some, especially when Powell is about to speak. So that might have some bad effects on the market move. So if you get it on the market very quick, you might lose because we're going to have some serious movement. So now we are on AUDCHF. I don't really trade it. I never actually traded AUDCHF, but let's check what's actually happening. On my side, I think this is a downtrend. Let's go on the daily time frame just to confirm that. You can see that the market is coming from the top, going down. So there's no point connecting to something which is like 2021. We can focus on what we see here as we are day traders, but you can still connect that if you don't really mind. But on a 4 hour time frame, I can see that the market is still trying to push the upside. But what I see is we are on a downtrend. I think we have this area here. The market respected that. Maybe the market will be going down. So another thing that I don't really like with these minor pairs, not I don't really hate them, but they don't really have proper structures because maybe the people they don't really trade them that much. So, anyways, thank you very much, guys.
Yeah, Kenzo, thank you for going through all those pairs. And I know one thing that I know the audience appreciates is you do it better than I do. You go through chart requests from the audience pretty heavily, which is awesome. So thanks for going through Euro CAD, Aussie Swiss, all the different pairs, and of course NASDAQ as well. Guys, I do also want to make sure that if you enjoyed Kenzo's analysis, both technicals and fundamentals, please make sure to go subscribe to his channel. It's the least we can do for our guests who come on to the show, who help make them what they are. So Kenzo's got his own channel where you can keep up to date with what he's got going on over there. So make sure to subscribe to Extra Hot Forex on YouTube. Kenzo, thank you very much for coming on the show and sharing your insights with us today.
Thank you very much, man. I will see you next week.
All right. See you next week. All right, guys. And again, big shout out to Kenzo and to all of our guests. Make sure to always go support them. It really does mean a lot. We don't pay people to come on as guests. They come on their own accord. They have their own, followings that they're trying to build and definitely deserve to be followed. That's why we bring them on. Anyways, guys, we're going to now transition to James is going to give us a little bit of a rundown as we stare down the barrel here to 11 a.m., which is when Jerome Powell is set to speak. As many of you guys know, anytime he speaks, the markets tend to listen. So possible volatility coming in the next hour or so. We'll go to James with the news now, quite literally the news now, which is the segment that he's got for us. So James, I'll leave it with you for a few minutes. Feel free to take your time, go through and prep us for this this speech that's coming in. Oh, I think you're muted. I think you're muted, James. It's all good. There you are.
When I'm wrapped up with that, do you want to go over our poll that we have in the Telegram?
Yes.
I see we've
definitely
got just over 200 votes on that right now. So a lot of people in the Telegram right now. If you're not in the Telegram, you can join it for free and answer our poll. we'll go over here in a few minutes. But until then, I'll talk about couple different news things that we've got going on today.
Cool. Okay, James, you got it from here. I'll come back and we'll talk about the poll in just a few minutes.
Sure, sounds good.
Cool.
All right, guys. How you guys enjoying the new Christmas theme? It's December, which is a lot of people's favorite time of the year. It's definitely one of my favorite times of the year. And theming for Christmas was a lot of fun. But here is the news now for December 1st. We're going to start off by talking about what's actually going on next week. Next week, we have a very, very busy news week. So let's talk a little bit about that. Starting off on Monday, over on the other side of the world, we have Swiss CPI numbers as well as the Australian interest rate decision, which I believe was forecasted to remain unchanged. So a lot of times what happens with those interest rate decisions, if it does remain unchanged, there may not be a whole lot of volatility. But if we get a big miss or a big, just a big miss in either direction, either, a rate cut or a rate hike, could certainly see a lot of volatility when it comes to those Australian dollar pairs. On Tuesday, we got some U.S. news, ISM services PMI, as well as JOLTS job openings. And we'll also have Australian quarterly GDP numbers. Wednesday, the Bank of England's governor, Andrew Bailey, is speaking, similar to today with Jerome Powell speaking. It's a big deal. And then we also have ADP non-farm employment change. And whenever we see those non-farm employment change news events start to pop up, we know what's coming pretty soon after that. And that's going to be the unemployment rate release. Also on Wednesday, we have the Canadian interest rate decision. So not only is it a packed week of news events, but it's a packed week of really important news events. Those interest rate decisions are always very, very important to the, the overall strength or trend of a currency. Especially, again, like I said, if there's a miss in either direction, we could see a lot of volatility with those Canadian dollar pairs. And then to finish out the week, quite honestly, it's just nothing but U.S. numbers. It's a lot of U.S. news. So Thursday, we have unemployment claims like usual. Friday, we have non-farm employment change, average hourly earnings, and the unemployment rate, as well as preliminary University of Michigan consumer sentiment. And now I believe that, I don't remember which ones. Here, I'm going to share this tab instead. So we have at 8:30, the average hourly earnings, non-farm employment change, and unemployment rate. That's all at 8:30. And then at 10, we have the preliminary University of Michigan consumer sentiment. So I would imagine Friday next week, kind of similar today, is probably going to be a longer stream than usual as we cover all of this news happening. So that's what to look out for when it comes to big news events next week. Certainly a lot of stuff to look out for. It could cause lots of big spikes in the market. But of course, that all depends on what the actual news is. So what's happening? The last time that we talked about this, I mentioned the ceasefire that was happening between Israel and Hamas. Well, it lasted about a week, which is a good thing. It was a good thing that they were able to come to some sort of agreement, come to some sort of ceasefire, and a lot of people were able to get a lot of aid that they need because it was a much safer area for people to walk around freely and get help to those who need help. Hostages and things like that were being released. In fact, that was actually one of the clauses of the ceasefire. I believe if it was both sides had to release 10 hostages each. If they did so, the ceasefire would gain an additional day. That, however, was set to expire at 7 a.m. this morning, midnight Eastern time, not Easter time, midnight Eastern time. So that has expired, unfortunately. Israel claims that Hamas violated the terms of the ceasefire in some way. Who knows if that's true or not? But the main thing is there is no longer the ceasefire, and they have already gone right back to lots of fighting. So again, unfortunate situation happening. The other thing happening that right now that I want to talk about is Bitcoin. I was taking a look at this the EDGEFINDER here, I was taking a look at the market heat map. I like to look at the market heat map some mornings and just kind of see what's a big mover of the day right now. So we can look at the indices up here. We can see the UK 100, German 30. Those are up pretty significantly on the day so far. The US 30. In fact, let me refresh the page, make sure that we're getting the most accurate information here. The market heat map is getting updated. Yep, see, there we go. The market heat map is getting updated every 15 minutes. I can see the last update was 13 minutes ago, so it's actually almost time for it to update again. But the UK 100 is up about 1%, German 30 close to that as well, 0.78%. But I noticed that Bitcoin, when it came to our currency pair assets, Bitcoin was our biggest mover of the day, up 1.84% right now. So I decided to pull up the chart myself, and I noticed something pretty interesting. So this is the Bitcoin chart on the daily chart here. And so if we scroll way in over here, we can see nice big green candle that actually was a little bit bigger earlier, but a nice big green candle here on the day for Bitcoin. It's been trending up pretty significantly for about, a month and a half, 2 months or so. Some pretty nice moves out here out of Bitcoin, but I was looking at this level and I noticed something kind of interesting. If we go back to this big dip all the way back in 2022, you'll notice that we're starting to break through what I believe to be some key levels of resistance here. You can see where all of these candles were touching right here on this level here. And you can also see, they were kind of topping out right here too. So we broke through already what I believe this right here around the 37,700s to be a key level of resistance, because you can see how much activity was kind of falling in this zone right here. In fact, I'll even mark it up just a little bit. So if we go from like here to about here, oop, and I've lost it. Do it one more time. So again, you can see how much activity there was in this zone right here with all these candles coming to test this area right here. And we have today, if I zoom out just a little bit, I know it's kind of small because it's it was a very long time ago, in fact. But on this day, on this daily candle, we have broken through that level right here. Today started off at about 37,196. So 37,196. About right there. So big move from Bitcoin today to break through those key levels of resistance here. We'll see if we close above them on the day. But that could be a big move for Bitcoin, which has been trending upwards for, the better part of this year, pretty much the entire year. All of 2023, Bitcoin has had kind of a resurgence here, some extended periods of consolidation. But as of recently, probably the biggest moves to the upside. And again, I believe it's broken through a key level of resistance right here. So if it could stay above that, perhaps we could see it moving closer to some of these highs here, but still a very, very long way from the all-time highs of 2021. But that is all I have in terms of news for today. Oh, I didn't even realize that Nick and Ivan are in here watching me give my chart analysis. I had no idea.
We like it.
Guys.
It's been awesome. We just joined in.
Thanks,
James, for going through the news. And I'm going to come back to our poll, if you don't mind, just because we're coming close here to the potential volatility from Powell.
Sure.
We'll come back to that. I want to speak with Ivan. We got a couple things to go over in terms of markets. So James, thank you for doing that. And we'll catch up back with you in just a bit.
Yeah, of course. No problem.
All right. Thank you very much. What's going on, Ivan? Sorry about the mix up earlier. Welcome back to the stream. And what's going on in Ivan's world?
Well, the thing is, you used to stream around like 4 p.m. my time, and now it's like 7. So I'm like, God, it's late. So that's right.
We jump around based on whatever the news is, so it can be confusing.
so to me, well, I had a limit order on Euro Yen earlier that got triggered. So I'm currently nursing $3 almost in loss. So Friday.
Yeah, Euro yen that you're watching. What about any other yen crosses? I know I think the Japanese yen is up a little bit today. Yep, up a little bit today, JXY. What do you think? I mentioned dollar yen, and I was thinking about you earlier. Any thoughts on
Yeah.
dollar yen? Are you watching this one?
Well, I sold it and I got out of it. What was it? 47.86, 46.86 or something, somewhere that bottom that candle. And right now I'm just nothing speaks to me, to be honest. Yeah, 46.86, something there. Yeah, so nothing speaks to me at the moment. It's low. It's not high. It's not high. I'm like, to me, like it's supposed to be week now. So I don't know. I'm confused.
Sure. Okay. Fair enough. And I guess now that we're speaking about a new month, right? We just joined into December. You're the seasonality guy. So what's seasonally of interest to you as we turn into a new month? And I guess, November ended up being a real interesting move across a lot of yen pairs. We saw indices rally. But what do you think about December? Any thoughts come to mind on it?
The result is very great up until the Fed meeting. So everything is now going forward is just getting to target, get out and get home. So we are, there's going to be a lot of, I wouldn't say crazy, but I would say quite aggressive trends. If they're not ended, they will end soon. So whatever targets you want to get hit, it's about time that you start considering the ramp up. So it's going to be a lot of aggressive trending for the next 2 weeks, and then dead.
Yeah, no, and that is a good point for the newer traders who maybe this is your first Christmas as a trader. You should be very, very aware that right around December 20th beyond, the markets just get dead silent. And if you're trading in there, it's going to be very spready. It's going to be very hard to catch moves that follow through. So to Ivan's point, that is a public service announcement. Be very careful as you get closer into Christmas. Markets tend to get real quiet, and it makes sense. People are away from the desk and they're with their family. So also, Ivan, we've got, I believe Chandler's working on getting our feed here for us so we can watch Jerome Powell, which should be interesting. So we can see what he's got to say in whenever he does get speaking. In the meantime, we had a discussion just before you were coming on about gold. And gold is an incredibly interesting market right now, at least in my opinion, because we have this scenario where economic data, we had PMI numbers, yet again, more cooling economic data, and you see inflation coming down. And it does paint an interesting story for gold. I want to get your opinion on it. What do you think about gold right now? Obviously, for me, it's not like at a place I can buy it or anything, but it to me generally looks bullish. What do you think? Do you agree? Do you disagree? Do you have any opinions on it?
I always disagree with you. So whatever you do, I do opposite of.
That's just being smart.
As somebody said, was it Vincent said? Vincenzo says, I'm going to stop trading against you, and I'm going to trade with you now. But I also want a deeper pullback on gold. But yeah, it's dollar weakness, it's gold strength, it is gold seasonality, it is the Indian wedding season. There is demand for physical gold going in. There is central banks buying gold. So higher highs, but it's difficult, the volatility short term.
Yeah, no, that's a good point. I mean, the volatility dropping, and I want to say, even though all conditions still point bullish, it gets tricky when it's already at the highs. And for me, it's like, if I'm going to enter this trade as a trader, my job is again to allocate money where it makes sense and when it makes sense to do so. So for me, I'm waiting for a pullback as well on gold. I think we're kind of stuck in this range. Either a break and retest would be of interest, or perhaps a pullback to this zone I might take as well. So an interesting candle, by the way, as we look at it. Big rejection here at this resistance around 2048. It'd be interesting to see how we react to that area. Ivan, also Jerome Powell is set to speak here. I think we have the feed coming. Whenever he gets going, we'll pull it up on the screen. But is there anything that you're looking from Fed commentary at this point? We've seen, of course, a pause narrative that they're no longer likely to rate hike. But are you looking at anything from Fed officials, Jerome Powell or the likes right now?
Dovish. Somewhere and just acknowledging peaking inflation, that we are getting closer to target, and hoping that CPI is going to be, inflation is going to be 2 point something next. Well, it's not going to say that, but acknowledging that CPI has peaked at least.
Yeah, and that's a point that I was going to come to you on as well. It is unlikely that Jerome Powell or any Fed official, well, actually, I take it back. Waller basically straight up said, like, oh, I think we might be able to cut soon. He came out and he was guns blazing. But someone like Jerome Powell, the chair, right, and the official statements are probably going to stay very far away from saying, we think we'll be able to cut at this point, right? The Fed does not want to unwind its own workings, right? If they start saying, yeah, we think we can cut by this point, what that's going to do is it's going to get markets to potentially swing back into the inflationary environment where people jump into stocks like crazy. And so they don't necessarily want to swing the other way completely. But I do agree with you. Any signs of dovishness are what the market is looking for. Any cooling on the, inflation is sticky components. I think that's really where markets are going to pay attention to. And this gold price is crazy on the screen right now. It just keeps going back and forth and back and forth. But I'm watching to see how this candle closes. This is a 4-hour chart. If you take a look at the 1 hour, look at this. I mean, it's trying. This is a 1 hour candle. We've got this is a new 1 hour candle. This is all in the last 2 minutes. That's a crazy move. And Jerome Powell, not yet at the stand, but we do have the feed set up for us, guys. It's Chandler will have it for us, but we'll pull it up once Jerome Powell actually takes the stand. Ivan, I do also want to say I have to jump off at 11:15. That's 13 minutes. So you might be the new Trader Nick in like 13 minutes, where you take over the stream completely. You're Nick with a mustache. That's an improvement. I can't grow a mustache.
You can't.
I can't. No. I have patchy beard. It's horrible. It's like my my weakness. I can't grow a beard. Can you grow a full blown beard?
Yeah.
Oh, that's awesome.
I am so fed up with it.
Oh yeah. I think I've heard that from people who do have it. It's like irritating. I only have to shave like every few days, and it's not that bad. So I'm lucky in one way, but everybody loves a good beard though, so it's worth probably the struggle.
It's all right. I feel sad for myself sometimes, but it's all right. It's all right.
Fair enough. Well, look at this gold price, Ivan, as we speak. Looks like we got ourselves a little bit of a breakout so far. Watch how this candle closes. But is that dollar weakness specifically? Let's see.
Kind of.
Yeah, look at gold. Gold is just, it's really, I mean, it is a little dollar weakness, but it seems like it's also just gold outright bullishness.
Yeah, that's more than the dollar one.
Well, the other thing too, Ivan, to point out, obviously the dollar index is heavily based around the euro, and the euro's getting killed. So that might be a little bit of it too. Like the euro's struggling, so that's propping up the dollar index relatively. But gold is like just killing it across maybe all currencies right now. That may be the way to read it.
Are you looking to buy euro at this level?
No, I don't. Are you? I don't like it so much.
No, it's you're the one. You're the one with the support level. Not me.
I do have a support level, but I'm more of like when I take trades, I like to trade it off like the 4 hour. And so I think we're at daily support, but I'd like to see on the 4 hour chart, I'd like to see this kind of get undone, like a higher low, higher high. So I liked it more when it was over here. And Now it's your turn. Ivan, euro dollar, bullish, bearish, kangaroo-ish. What are you thinking?
I wanted,
Oh,
I
hey,
wanted
Frank.
to
Welcome to.
jump up from.
I just,
Hey,
just
I don't know
noticed
when I got in here, but hey,
you got put in here by the editing gods. We've got we do have Jerome Powell's potential speech pulled up, but he's not quite on the stand just yet. I'm sure we'll
I
get
saw
that.
some notes about it. They said that Fed officials are agreeing that it's likely the rate hike thing is likely done.
Okay,
Um,
that's big news.
yeah,
Yeah,
And
that's
yeah.
that's nice to know
Why isn't the dollar dropping more, Frank?
because
Because
the
they're
markets are funny and they make no sense sometimes.
Okay, fair enough. Ivan, I'm still putting you on the hot seat for euro dollar. You have to tell us now
Yeah,
because
okay.
I did it. Now it's your turn. Euro dollar, bullish, bearish, kangarooish. Which one?
I just bought it.
Okay. I don't hate the buy.
I
just
don't. Well, it's a scalp for Powell. Powell should be dovish. So, and the euro has fallen so much today. They should go back up again. Of course, that's what I believe. But no, I think it's a pretty good discount rate. But I wanted to buy there anyways. So it's kind of like, oh, I'm on the wrong chart. Sorry, bros. I wanted to buy there anyways. So it was kind of in the area. So to me, it's where I want to have it. So I'm
okay.
all right.
Fair enough.
108.4, 108.80, somewhere around there, in that direction.
Frank, what do you think about? Of course, we've got. It might be a feed coming? I can't tell. But what are you watching, Frank, in terms of as we go into this news here today? Dollar focused currency pairs or indices, gold. What are you watching closest?
Dollar focused, anything against the dollar.
Mm-hmm.
The higher it goes, the more I want to
Anything that
look
moves.
at shorting it. So I don't understand, or I don't really see why the dollar should rise after this, other than maybe it'll complete that move in that trend line. But I think I'm happy to be short dollar and look at. I keep missing gold. Surprisingly, I've been looking at Bitcoin too, which is
Oh,
not something I really do, but I may be taking a trade there because that broke some serious resistance on the daily chart. And there's something with SEC. I don't know the whole story, but this was like a month ago. Oop. And they couldn't get it through. It didn't pass through the Senate or something for more like tighter regulation on crypto transactions or whatever, and it just didn't pass. So that's what was the main catalyst. But it broke above 38,000, which was a big psychological level. So I'm kind of looking at that because going into the new year, things kind of pump up in the beginning of January. So that EU, I'm probably going to attempt EU again. I got stopped out like once or twice on it. But
okay. And Frank, I don't mean to cut you off, but we do have the man
A member
himself
of Delta
on the
Sigma
screen.
Theta.
So we'll leave him and go for that.
My Federal Reserve colleague, Governor Lisa Cook. I'd say there's no greater testament to Spellman's historic legacy than the achievements of outstanding women like Governor Cook. One part of that legacy is Spellman's tradition of promoting education in STEM. Governor Cook's research highlights the key role of such education in preparing individuals to be inventors and innovators who can generate ideas that will add to our body of knowledge, increase productivity, and generate higher living standards over time. Her work is just one example of how Spellman women continue to make historic contributions in science, the arts, technology, medicine, and other fields. I look forward to our conversation, and I thought I might frame it up first by talking about the Federal Reserve's ongoing actions to promote a healthy economy and how those actions relate to questions that students in this audience might be asking about the future. For example, I imagine students are wondering what kind of job market and what kind of economy you'll be entering when you complete your education. To start, Congress assigned the Fed the dual mandate goals of maximum employment and price stability, and both of these goals are essential aspects of a healthy economy. Congress also gave the Fed a precious grant of independence from direct political control to allow us to pursue those goals without consideration of political matters. Other major central banks in democratic societies around the world have similar grants of independence, and this institutional arrangement has a strong track record of producing better policy outcomes for the benefit of the public. So let me go to the two dual mandate goals, and I'll start with maximum employment. I'm glad to say that by many measures, the conditions in the labor market today are very strong. A couple of years ago, if you go back, the pandemic was receding and the economy was reopening. The number of job openings grew to greatly exceed the supply of people who were available to work, leaving there a widespread shortage of workers. Today, labor conditions remain very strong, and the economy is returning to better balance between demand and supply for workers. The pace at which the economy is creating new jobs remains strong and has been slowing toward a more sustainable level. That gradual slowing has come in part due to the efforts of the Fed to slow the growth of the economy to help reduce high inflation. After declining sharply during the pandemic, the supply of workers has bounced back as people have come back into the labor force and as immigration has returned to pre-pandemic levels. Partly because of that labor force growth, the unemployment rate has edged up over the second half of the year, although it remains historically low at 3.9%. The increase in labor force participation has been particularly strong among women in the prime working years of ages 25 to 54, which surged to an all-time high earlier this year and which remains high and above pre-pandemic levels. Wage growth remains high, but has been gradually moving toward levels that would be more consistent with 2% inflation over time. So real, which is to say inflation-adjusted wages, wages after inflation, are also growing again as inflation declines. Turning to price stability then, the second part of the mandate, we have a longer run goal of 2% inflation, and after running below 2% for over a decade, inflation increased sharply in 2021 in the United States and in many other countries around the world. High inflation imposes a significant hardship on all households and is especially painful for those least able to meet the higher costs of essentials like food, housing, and transportation. Beginning in early 2022, we reacted forcefully, raising our policy interest rate and decreasing the size of our balance sheet to help slow the economy and bring down inflation. And inflation has now declined to 3% over the 12 months ending in October. But if you factor out energy and food prices, which tend to be volatile, you get what's called core inflation, and we look at that too. That is still on a 12-month basis, 3.5%, well above our 2% objective. However, over the 6 months, now looking at more recent data, the 6 months ending in October, core inflation is actually running at about 2.5%. And while these lower inflation readings of the past few months are welcome, they're highly welcome, that progress is going to need to continue if we are to reach our 2% objective. The high inflation that we got beginning in 21 initially emerged from a collision between very strong demand and pandemic-constrained supply. And the normalization of supply and demand conditions that we've seen has played a critical role in the disinflation, the coming down of inflation so far, as has the substantial tightening of monetary policy and overall financial conditions over the past 2 years. The strong actions that we've taken have moved our policy rate up and well into restrictive territory, by which we mean that tight monetary policy is putting downward pressure on economic activity and inflation. Monetary policy is thought to affect economic conditions with a lag, and the full effects of our tightening likely have not yet been felt. The forcefulness of our response to inflation also helped maintain the Fed's hard-won credibility, ensuring that the public's expectations of future inflation remain well anchored. Having come so far and so quickly, the FOMC is moving carefully forward as the risks of under and over tightening are becoming more balanced. As the demand and supply related effects of the pandemic continue to unwind, uncertainty about the outlook for the economy is unusually elevated. Like most forecasters, my colleagues and I anticipate that growth in spending and output will slow over the next year as the effects of the pandemic and the reopening fade and as restrictive monetary policy weighs on aggregate demand. The FOMC is strongly committed to bringing inflation down to 2% over time and to keeping policy restrictive until we are confident that inflation is on a path to that objective. It would be premature to conclude with confidence that we have achieved a sufficiently restrictive stance or to speculate on when policy might ease. We are prepared to tighten policy further if it becomes appropriate to do so. So we're making decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. And that's an overview of what my colleagues and I at the Fed are working to accomplish. The bottom line, if you're a student, is that we've made considerable progress in reducing high inflation while maintaining a strong labor market with a lot of opportunity for new graduates. The unemployment rate has moved up a bit, but it's still very low by historical standards, and by many measures, it's a great time to start your career. You'll face challenging decisions soon about what professions to enter and what companies and other institutions to work for. Of course, some of you will become entrepreneurs, but each of you has already made one really good decision, and that's coming here to Spelman. Whatever opportunities and challenges emerge, education will continue to be a key to success. Higher education is an investment and not just of money. You're investing your time and great effort to gain knowledge and skills that are preparing you for successful careers. Your success will make for a stronger economy. For our part at the Fed, we're doing our best to foster an economy that gives you the best opportunity to succeed. And with that, I will hand it back to you, President Gale.
What do you think, Ivan?
Well, thank you so
No,
much.
can't hear you at all.
That word of encouragement.
Something's wrong with the sound.
Sometimes.
No, I just turned up my microphone.
Oh, thought it was on.
No,
our...
I didn't hear anything specific.
Say it's Spellman. We are.
Yeah, same.
Just the normal things. Are you posting the video, Chandler?
All that you did to make this visit happen, but also for all that you do to represent.
Yeah, we probably don't need to hear the rest of this.
And to
No.
your colleague and our friend Raphael Bostic.
It's this is where I expected the peak to be today, anyways. But I didn't hear anything particular. He still said that we don't know. Well, we're not sure if our policy is restrictive enough. That is a bit more bullish, but generally speaking, he didn't say anything about higher interest rates or that inflation is too high. I said something earlier. Where was it? I say that I expect spending and output to slow over the next year, which is kind of the main motto of what we wanted to hear and had to see him say. So, what do you call it? Continue as normal.
Yeah, I mean, what he said about output is kind of nothing new either. He said something is because we're raising interest rates, that's what we expect. And they even said that earlier this year, and then GDP numbers were better than they expected. So, he has to just remain cautionary and say, we expect these things to happen, but they may or may not. And I think I read something earlier today that the Fed can't really afford to hike again. Having the 10-year note above 5% was like a red flag. So I think they're going to try to avoid that as much as possible. And yeah. Oh, did you kick Ivan?
No, I was still
No, he was still in there, but I accidentally covered him for a second.
What's
All
up,
right,
Gene?
so I think we're getting ready to wrap up here. Do y'all have any closing
Wanna go
thoughts
home?
about? Huh?
You want to go home?
Yeah, we're gonna call it a day.
Yeah, no, I mean we've been streaming for nearly 2 hours at this point, Ivan.
Come on, we've been here for 3 hours before.
We have,
We did 6
but
once.
not a daily thing. Ivan wants to keep going. Maybe we should just let Ivan take over, and he can stream.
You were
like
just
6
1
hours.
minute early. That's all. That's all. Nothing bad.
Ivan, you got it. I'm gonna get off, but if you want to stay
No,
on.
we're gonna do the poll really quickly. We're just gonna go over the results of the poll, and then we'll wrap up from there.
That's all right.
So let's see. I have the poll right here for us. Let's see. Can y'all see that? I don't know if you can see that because I'm only on a laptop.
Still see my screen. Okay, wait. Now I can see it.
You can see the poll?
Hmm.
So the question was, what trading tool do you want Santa to bring you? It was the EDGEFINDER, the VIP Discord, Nick's complete trading strategy, TradingView Pro access, or a funded account. We had 260 votes. I think I know what my answer would be. I think I would choose the funded account. Trade a little bit risk-free. Not trading.
Santa doesn't have access to our EDGEFINDER or VIP Discord.
Who doesn't?
Santa.
Santa has access to a lot of things, Frank. I think you would be surprised.
Oh, you think so?
I think so. Ivan, if you didn't have any of this stuff, would you take the EDGEFINDER? Would you take the Discord? Would you take Nick's strategy, TradingView Pro, or would you take a funded account, Ivan?
I honestly don't know. Maybe Nick's complete trading strategy and then the funded account. But but yeah, as everything, like I can't choose. Like it's difficult.
Yeah. Well, they certainly all work together to make you or to help you be a more successful trader. But I think that I would take the funded account, which you can get funded right now with FX2. By the way, you can use our promo code for a discount on your evaluation fee. And the funded account is actually it narrowly edged out the EDGEFINDER here. I was surprised. I thought that most people would say the EDGEFINDER got 77 votes. But the actual winner here seems to be the funded account. Interesting.
The funded to the moon, then.
Funded to the moon. Yep, that's right. All right, so I think that's going to wrap up the stream for today. Ivan, thank you so much as always for being part of the stream. The A1 trading streams would not be the same without Ivan. Everybody, and if you want more of Ivan, you can find him in our VIP Discord. He shares his trades in there. He does mentorships. He does webinars. He does a lot of it. The VIP Discord is Ivan. It is Ivan. But thank you, Ivan. Thank you, Frank. We will see you guys next week for another busy news week. But I think that's going to wrap it up from us here.
Thanks, Ivan.
Thank you very much for having me.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through our daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And yes, I'm Santa and I work for A1 Trading. Don't ask any questions. Now, get lost because I have some presents to deliver. I'll see you all at Christmas.